Good morning, everybody. Welcome back to another episode of the Market Open. It is November 1st, 2023. Folks, we are in November. It is time. November 1st. Kind of insane that we are 11 months basically into the year, and we've got two of them left, November and December. And then we're going to be in 2024. And this year, I think, has been very interesting for a variety of reasons. Obviously, the economy is one of those reasons for why this year has been interesting. And we're going to see in the next 2 months where this year ends up. A historic year for the markets for a variety of reasons. The fact that banks failed and somehow the S&P 500 is still up this year, but also because some of the most innovative companies in the world still have to report their Q3 earnings this year. One of those being Palantir, that we're going to talk about. That's going to happen tomorrow. And then a company that's not as innovative, but the valuation looks like it needs some innovation and likely is going to get some innovation, which is PayPal reporting today. So we've got a lot to talk about. Thank you all for being here. Back in the studio, proper Market Open. Got everything set up, everything I need to be able to see and do what I need to do. Happy to be here. Excited to be back and ready to get back to work because we got a market to open. Billy Jack, Joseph Viegas, Midwest. I did mess up on the title. I said Jerome Powell either hikes or raises today. I meant to say hikes or pauses. So maybe that's a sign that I already know what's going to happen. Stefan, Mike Rose, Samuel, Roy Dominic, Missy Iger, Jay Duff. Thank you all for being here. Chris Patel's in the chat. Monty, Paul Gogan, Miami, Ren, David, Emmanuel. Thank you for being here. Ty Gordon, Stefan, Juan. Hikes or raises. Yeah, that was my fault. I'm sorry. Nolan, Jeremy, Domenico, Mike Rose, Invest, Felicia, thank you all for being here, and Imnop. You know the crazy thing, guys, is my vision is still spinning. So yesterday I got home, I did the Market Open, slept for 3 hours after that, woke up, ate something, and slept for like another 7 hours. Woke up, went downstairs, saw my mom and dad for the first time in 4 days. My mom's like, "Oh, nice to see you." Then she hands me a mop, and she's like, we're doing something in the house. It's like some religious thing this morning. And she's like, we got to clean. And I'm like tired out of my mind. Like I'm literally like, oh, I cannot believe I just took 17 flights to get here. And now I'm mopping the kitchen floor. So I clean for the next 2 hours. Then I go back to my bed. And I think I slept like 4 or 5 hours last night, but like, I'm not fully recovered. Like things are still spinning, which is why I said hikes or raises instead of hikes or pauses. So I'm happy to get back to work, but gotta just, I think, drink some water, to be honest, and like get my system back to normal and do what we need to do to get recovered. This is the first time I drank alcohol in like a year. So I think the effects of that is, even though I'm young and the hangovers aren't as bad, they are definitely lasting because I haven't drank in so long. Strawberry Cookie says I haven't slept since yesterday. Well, Strawberry Cookie, you and me are in the same boat, basically. Voice is back. Yes, voice is back. All right, let's get into the Market Open and what we've got going on. First thing I want to talk about today is some macro. And the macro news that I want to talk about today and discuss is Jerome Powell and what he is going to do. Now, it was really funny. We had a popular account on Twitter basically say that, he asked the question, what are the chances that the Fed is going to raise? And Dan Ives tweeted, there is a better chance I go to the NFL than Jerome Powell raises. So it seems very likely, just given the investment community making their decisions around what's going on with the Fed hike, that there's not going to be a raise. And as a result of that, I think we can all kind of rest and acknowledge the fact that there's a better chance of me playing in the NFL tomorrow than the Fed raising. What are the reasons the Fed is not going to raise? I think there's a variety of reasons, but let's go through them to remember because it'll help inform our decision. Number one, Israel and Hamas. There is a war that is officially happening. I believe Israel is officially inside of Gaza and their ground troops are there. And if you were to raise rates, you would make economic environments more unstable, more uncertain, potentially create more supply chain bottlenecks, potentially hurt oil prices even more. They've been elevated at around $88 for an average of October. We'll see if they come down in November. Gas prices have come down, but it still is in a hard situation for oil writ large. And in September, it was at like 94 an average for the entire month. So you want oil to come down. You don't want to cause any problems in the Middle East. Obviously, the Middle East has a lot of oil. So, those are three sort of basic reasons why Jerome Powell won't raise. Another reason they're not going to raise is because the economy is, okay, so it's going to sound weird if I say this, but it kind of feels like the economy is starting to slow down a little bit. Now, if you look at the GDP numbers, the economy is not slowing down, right? We had 4.9% GDP growth last quarter versus 4.7. So it's like, what economy that's slowing down? Numbers across the board for some of these companies have been pretty amazing. Yeah, there have been here and there some anomalies, but Facebook amazing, Google amazing, Amazon amazing, even if their stock prices don't reflect it. I think internal data that a lot of more investment funds are seeing, for example, Bill Ackman, that the economy is slowing down faster than expected, is what also is influencing the Fed, at least to an extent, to say, hey, maybe we should think twice before we raise rates, given how bad this environment is for the broader economy. And then the final reason I think they're not going to raise rates, which is the most obvious one, banks. Most banks have a lot of AOIC losses on their portfolio in regards to the loans that they gave at a lower interest rate, 2-3% back in 2020. And now interest rates are at 5.5%. So it's like there's a loss there, right? They're negative on that spread. There are banks. I think JP Morgan has, I think $40-50 billion of losses on their portfolio. Bank of America is close to $100 billion. I might get the numbers wrong, but you get what I'm saying. There are a lot of losses on these banks. Truist has about $17-18 billion of losses on their portfolio. If those losses increase because interest rates go up, which is what will happen, these banks are going to be under more stress. The cost of deposit is going to be higher. They're going to have to increase their APY to get a customer to come into the bank from like 4.6 to like 6,000%. They're going to have to give customers to come in. I'm being facetious here, but their net interest margins are going to go down. It's not going to be good for the overall banks. And banks had an amazing quarter, even though some of them lost deposits and cost of deposits went up. SoFi, for example, one of the more newer banks, got $2.9 billion more dollars somehow to enter into their ecosystem. That's not easy to do. And if banks are somehow surviving, I know Silicon collapsed, I know FRC collapsed and Credit Suisse collapsed, but 3 out of the 4,000 that are stable, I think that is a good sign. And if the Fed raises rates, they put that in jeopardy. If the banks collapse, then the entire economy collapses, because for a variety of reasons, less lending, less stimulus, less economic activity. So you don't want the banks to collapse, which means, in my opinion, it's going to be very likely Jerome Powell does not raise rates. The question becomes today, what is the market's reaction to them not raising rates? And if I had to bet, I would say the market is not really going to care because it's so obvious that they're not going to raise rates. NVIDIA, by the way, at 407 in the pre-market, so it bounced up from that 392 yesterday. Seeing NVIDIA go under 400 was scary, to be honest. I mean, that one was tough. Tesla also at 204 in the pre-market, so it's doing a little bit better, 1.77%. Given Jerome Powell sees that banks need to survive and that companies are doing okay, even in a very high interest rate environment, given the past decade, I don't think we're going to raise rates again. But I also don't think the market's going to care that much. And likely the market is just going to be like, all right, well, you raise rates, or you're not raising rates, we're good to go, and we'll move on and we'll worry about the next thing. And that's what it seems like is going to happen. 10-year is slowly declining. Let's check that out as well. Christopher, thank you for that comment. Let's look at the 10-year treasury yield, this 10-year that I've become so wedded to. I went to Vegas. Who did I get married to? I went to the chapel and I got married to the 10-year. And our vows was that this bitch has to come down to 4.2%. Otherwise, I'm not marrying you. And let's just say in those vows, she made me a promise that she'll come down to 3.9. She didn't tell me when, but it's in her vows and it's a promise. So hopefully it does come down. So who was the bad influence on him? Honestly, it was Carlos. Chris was the right older brother in Vegas. He was teaching me all the right things to do, giving me life advice. Carlos was red pilling the shit out of me. I got to truly know who Carlos is. Carlos and his mindset is it's very interesting. And quite frankly, a new personality type of mine has been unlocked. It's called IDGAF. And that's because of Carlos, and honestly, just because of growing older and realizing that a lot of shit doesn't matter. And the shit that does matter, you got to fight for it. The shit that doesn't matter, you got to move on. Did the stepsister, agree to come down even more? No. I probably should have put that in my vows, though, Jay Shash. I probably should have put those in my vows. What else we got in the comments? Maybe PayPal will moon today. We'll talk about PayPal in a second. What if they lower the rates today? Dude, there's no way in hell. If they lower the rates today, I don't know, man. Lowering the rates would be that. I don't even know if the markets will be happy about that, because I feel like inflation is not going to necessarily be in the best situation if we're lowering rates. I guess the Fed would see some different information, but we will see. Chris says I had a good time with Goodwin Deschente. For those that don't know, Goodwin Deschente is Carlos's alter ego, and he has a hat to justify his alter ego. So I was wearing his hat the last day, and so that hat is Good win, Deshente. One day, maybe y'all will be able to meet them. One day, you guys might be able to meet Mr. Goodwin Deshente. Okay, so let's talk about. We did the 10-year. We did let's check Brent oil. All right, so oil's at 87 right now, down a little bit since yesterday. Is down 2% in the past 5 days. Let's move on to some earnings. I want to see a couple earnings that came out, and then we'll do PayPal and Palantir. Oh, hold on, we got some job reports. Okay, so let's do this. Let's do that, and then this is something I want to talk about. All right, so we're gonna go through a bunch of headlines. I think another segment I'm gonna do on the market open is just called headlines. Headlines is when, and you see other news broadcasts do it, where they just go through like 5 or 6 things over 5 minutes. So they don't spend a lot of time on one thing, but they talk about a bunch of different things. So different headlines we have going on, okay? Number 1, WeWork is officially filing for bankruptcy. WeWork, the company that was started by Adam Neumann, they raised about, how much did they raise? They raised, from what I remember, 5 to 7 billion in venture capital. I could be wrong on that. It's definitely more. It's not less. But they are officially, from what I understand, applying for bankruptcy. Their stock went down about 30% last night. Let me pull up the stock real quick. And I have an interesting story about WeWork that a lot of people don't know, but I do want to mention it because it gives you an inkling of what WeWork is. Okay, so yesterday the stock was at $2.29. Now the stock is at $1.32. And the reason for that is because it seemed obvious that this company was going to file on bankruptcy. WeWork shares sink on imminent plans of bankruptcy filing, tanked over 35% pre-market this Wednesday, which is today. The New York-based firm, struggling with a heavy debt load and hefty losses for years now, was once privately valued at $47 billion and is now worth $121 million. This is also not going to be good for SoftBank, that I believe still has some shares of WeWork. Why is this company going bankrupt? Essentially, this company was never a tech company. They were a real estate company. The technology platform embedded in their real estate play was just like a community sharing kind of social network platform. If you've ever seen any documentaries of WeWork, it was all a bunch of bullshit, really. So, it was never a tech company. It was valued as a tech company. The one thing that I think sums up WeWork that's interesting to understand is how a founder can organize people around a vision and then have that vision turn him into a narcissistic egomaniac when it comes to evaluation, that it destroys the ability for that founder to actually build something of meaningful value. Adam Neumann, the founder of WeWork, entered into a limo with Masa Son, who is the chairman of the Vision Fund that has $100 billion from SoftBank. And in those 5 minutes, Masa Son basically asked him, how big do you think it could be? And he said, I think it could be an XYZ billion-dollar company. And Masa said, think bigger. And then he said, I think it could be a billion-dollar company. In those 16 minutes, that was the reported limousine meeting, Masa Son then gets out, writes him a check for $4 billion and says, go make this the biggest company in the world. And so there was something about Masa not being in his right senses, not understanding what the company actually was. It was not a tech company. It was a real estate company. There was not the types of margins you would, imagine that a software company gets. But there was also something around the storytelling and communication skills of Adam Neumann, basically being able to get this guy who has $4 billion that he can give in 5 minutes to give up that money. And as a result of that, you just had crazy meets crazy come together. And then JP Morgan and Goldman Sachs decided on a valuation that was really crazy because they wanted to make a shit ton of money underwriting the IPO. And then you get to this $47 billion number. And then finally, Adam Neumann just like lies on the accounting. He starts smoking on an airplane in Israel where it's illegal. He's walking barefoot. He starts doing all of those eccentric things without having the eccentric results. Like he starts acting like Elon without actually producing results like Elon, that the company decides to go under, and, he's removed as CEO. He gets $1 billion share package to leave. And then the company ends up hiring some Indian guy that couldn't say because it's not a tech company. So that's why WeWork is done. WeWork is just a black Ponzi scheme with partying teens. Yeah. At the end of the day, WeWork had a lot of problems trying to get people to buy into the business model, at least for investors. It makes sense, right? Rent out space and then people are able to use it, but it's not enough for them to actually sustain a business. So you got WeWork that's going under, and maybe that's actually good for this market because we do need some of those companies, going away and having the real companies survive. And then we have private sector payrolls. Let's actually go to this. ADP job reports October 23. So private sector payrolls rose 113,000 in October, less than expected. ADP reported that companies added 113,000 workers for the month, higher than the 89,000 in September, but lower than the estimate of 130,000. Now, ADP is not always the most accurate. So I think on Friday, the first Friday of every month, which will be this Friday, we're going to get actual job data. But this is interesting, right? So we're getting less jobs than expected, more than last month. Theoretically, Bill Ackman's argument about, hey, the economy's slowing down lower than expected, this would be supporting that argument. Not only is WeWork potentially going bankrupt, that's good for an economy that's going slower versus faster, right? Because shittier companies can survive in a fast-growing economy. But less jobs means less people getting employed, means less companies having economic movement, means less payments are going out, less money is being spent. So this could be an argument that, look, the economy is not in a horrible position, but it's definitely slowing faster than what people expected. And I think Bill Ackman doesn't need to be, right that there's some catastrophic recession on the way, but he does have to be right that you shouldn't obviously be shorting your bonds if the economy is slowing faster than expected, because then those those interest rates will come down, which means bond yields will also come down as well, which is, again, why he's not shorting bonds. So that type of data is an interesting piece of news to kind of come to the conclusion for why the economy might be slowing down. We got CVS results as well. Let's go to this one. CVS results, top expectations lifted by strong health services revenue. Let's see the numbers on this bad boy. $2.21 earnings per share versus $2.13 expected. Revenue, wow. I did not know CVS was that big of a company. $89 billion. My goodness. That's a lot of money. They beat by about $300 million on expectations. 89 versus 88 billion. Are they profitable? Is CVS profitable? The division processed 575, blah, blah, blah. Okay, so their pharmacy business is growing phenomenally, 8.8% growth in sales, 9,000 brick and mortar drugstores. So it's a pharma company, right? That's also why their revenue is so high, similar to Walgreens. Walgreens did like 145 billion in revenue. They're going to do that much this year, which is just insane. Are they profitable? I feel like it's not saying if it's profitable. Oh yeah, here we go. Net income of 2.27 billion. Okay, so they lost 3 billion last year, same time. Now they are profitable with 2.27 billion. I'm looking at their stock real quick. CVS. Never got super interested in this company. CVS is down 4%, so I guess the guidance wasn't the best. 88. Wow, they brought in $89 billion of revenue and their market cap is 89 billion. That is very, very interesting. Yeah, I mean, look, this is not one of those high growth tech companies, so it's not super, super exciting. It's interesting in the context of Walgreens, given Walgreens is struggling a lot, and that's one of those stocks that's getting some more retail momentum. But we are seeing a little bit of at least healthy earnings from CVS, even if their guidance isn't the best. Let's move on to PayPal. We got to talk about that. But before we do PayPal and Palantir, we're going to do individual segments on that. I do want to bring up a guy who had at one point and sold out of it at $8. By the way, RBC Capital reaffirmed their price target at $5 for PayPal. Let's look at Stanley Druckenmiller, one of the most legendary investors, big investor in Palantir at one point, and let's hear what he has to say about the government and the overall economy.
To what you're salivating over, Joe.
I'm going to let you do it. You go in the sequence you want. They introed it like that. Go ahead.
So at this point, in 2021, in the second half,
Yes.
All right, interest rates on the 10-year are like 1.1. On the 30-year, despite having been corrected in a tweet, and I was right to be corrected, it was not 70 basis points under the Biden administration. It was, let's use 1.1. That's a more reasonable estimate. By the way, the tweet that corrected me on the 30-year is incorrect. It was trading at 166 as a low that period, and it was under 1.8 plenty of the time. The tweet that said that Treasury has never managed the maturity of the debt is also historically incorrect. As most of you probably know, the Treasury Department suspended 30-year auctions in 2001 because term premium was high, the yield curve was steep, and they thought it was a useless use of money. So they were reinstated 5 years later. One more thing on this issue. In terms of the maturity of the debt, Treasury will have you believe, and the tweet used this, that the maturity of the debt is 72 months. That conveniently leaves out $8 trillion that is funded overnight in the repo market. That's the Fed balance sheet.
Right.
How much overnight?
$8 trillion. That's the Fed balance sheet. We at Duquesne use the consolidated government debt because we're looking at what the taxpayers are on the hook for.
Right.
In fact, when the Fed was making profits, they remitted the money to Treasury. So why you would leave out, in terms of government debt, $8 trillion, under that, the maturity of the debt, which was 63 months pre-COVID, is now 57 months. So the statement by the Treasury Department and others that the maturity of the debt has increased since pre-COVID is absolutely incorrect. All right.
That's
You
like
want something? You guys can interrupt.
That's like we created 12 million. That's the same kind of.
The question I have, putting aside the Yellen,
I want to get to
Mnuchin,
his answer, though.
or whatever.
So
No, my one question is, do you believe that there would be a market for selling much longer term duration bonds, either many more 30s or going up to 50s or 100s? And the reason I ask is that was the implication, I think, of what you were saying. I made a bunch of calls yesterday, and I know then I started reading all these studies and other things that folks inside the Treasury Department, including under Mnuchin, looked at doing that 50-year. In fact, I looked and found an interview that Mnuchin had done with me at a DealBook thing years ago, where he wanted to do it, but then realized or thought that he couldn't do it because he didn't think that there was enough of a market and that it would actually.
Remember, Trump wanted to do 30 years as well. He wanted to issue a lot more or more 30 years. So Trump wanted to issue a lot more long-term bonds as well. But and that would have been the right time to do it in 2017, 2018 when rates were low, but they didn't end up doing it.
It would sort of pervert the rest of the market otherwise.
currently, no. I think that market would be very challenged in the current environment. Don't forget, pre-COVID, we were spending 20%. The federal government was 20% of GDP in spending.
Right.
It's now 25% of GDP. As outlined in the Wall Street Journal editorial this morning, my father told me, if you're in the hole, stop digging, Stan. All right. So I was actually happy to see when the announcement, the support for Ukraine and Israel, $106 billion. And I was waiting to hear what the offset was going to be. Was it going to be entitlements? Where were the cuts going to be? And the next thing I knew, 2 days later, there was not only no offset, there was $56 trillion in emergency spending. I have kids, I have grandkids. Childcare is not emergency spending. It's a priority that maybe should be on the table or not, but we are spending like drunken sailors. Okay, so
do you agree with the?
Like I would tend to agree. We're spending like crazy. I mean, we're going to have 50 trillion in debt by like 2027 if you look at some studies. And I don't know what's the solution to it. So I don't want to just lament the government for doing it. Yes, the solution is not spend as much, but I know it's much more nuanced than that. But we're spending a lot. And one could argue this whole Roman Empire thing is starting to come up more because we just can't keep spending this much money.
House Republican plan, which puts forth spending for Israel, but cuts it in the IRA through funding to the IRS. Is that an appropriate offset in your mind?
Becky, I want to go after entitlements. It's right. where the money is, and
you're not going to solve this.
At some point, it's going to happen. I'm going to give you some numbers to tell you why.
Do that. Yeah.
It's going to happen no matter what. Anyway, getting back to the question, and then real quick,
entitlements is like food stamps, right? Childcare, the stuff you're paying for. That entitlements is more so the stuff where on a meritocratic system that is the United States, someone is making less money than their counterparts, and as a result, they can't afford something, like healthcare, and so the government subsidizes that. There are a wide variety of entitlements. Food stamps is a popular one, and there's a lot of other different programs. And so when Druckenmiller says we need to go after entitlements, the only way you fix entitlements is if you get people above the poverty line, which means there needs to be more capitalism, more entrepreneurship, more economic movement, more people creating innovative companies. That's why America has to become the risk-taking center of the world, because if you don't have a Facebook and Amazon, a Tesla started in America and they're started other places, millions and millions of people are not going to have opportunities to provide value to society, get compensated for that. So they don't have to rely on a bureaucratic system that is the government, that relies on the people making the money to have the tax revenue to pay the entitlements, or to just keep printing money and devaluing our currency. So it's a much more nuanced issue, but essentially Druckenmiller is saying we need more capitalism and less entitlements.
I really want to leave it
Okay.
because that's something that's in the past. We can't fix it. We missed a once in a century opportunity, and let's just not.
Everybody else
discuss
found out.
it.
That's your point. Everybody extended mortgages.
No, so here's the thing. Yesterday, Steve Leisman said, I wanted Treasury to trade like a hedge fund. Okay, I do not want Treasury to be trading and messing around the maturity of debt. All I'm saying is in 2021, Janet Yellen, okay, and Mnuchin before her, we spent $5 trillion. The idiots were lined up out there, wild to buy Treasury debt at 180, 2%, whatever you want to call it. Let's not play gotcha on this one, okay? Or 1.1%, with nominal GDP growing at 10%.
Right.
10%. Okay, so look, it's not like it took Stan Druckenmiller to figure out that you're at like a 700-year low in interest rates. Okay, nominal GDP is growing 10%. That the risk reward of issuing debt at 1.1% in the 10-year is off the charts. How off the charts was that risk reward? 80% of American households, 80% refinance their mortgage. They lengthened the average maturity of mortgage debt from 3.5 years to 8 years. As a consequence, it's going to take 5 years for that maturity to go up, to get back to like 4.5. So it's just huge in terms of what they saved.
Stanley Druckenmiller is not happy. He's not happy at all. I think in his portfolio, the largest positions, if I can try to find it and pull it up, but I remember it's Amazon and NVIDIA. I'm sorry, Microsoft or NVIDIA. But yeah, this guy is not happy at all with the state of the economy. And I think the reason he's been making the rounds on media is because when a figure like him basically says we need to stop spending as much as we're doing, I see some major issues in the economy. It's not because he's just trying to short the economy or make money. It's because he's one of those people that's been a big name in the investment community for a long time. And he is concerned about where things are going. Chris says taxes need to go up. Spending needs to get cut. Goldwinger PBG says we need to raise corporate taxes and curb government spending. One of the things that Biden did that people actually don't know about. So remember Trump, he cut corporate taxes, I think from the highs of like 35 or whatever to 21. It was kind of a flat 21%, but he was supposed to cut corporate loopholes as well. He never did that. When you factor in corporate loopholes on top of that 21% flat tax rate, corporations ended up paying basically nothing, right? Maybe 1 or 2%. Biden actually passed a policy, I was reading about it last night, where the corporate tax rate, no matter what happens, no matter what loopholes, is 15%. Now, I don't know if some of those loopholes still don't apply, but that's the one thing I think out of everything Biden did in the context of increasing tax revenue that maybe has been more positive than not, by making sure corporations pay at least 15 cents on the dollar for every dollar they make. One could argue, look, maybe those corporations need to pay a bit more given how much economic prosperity we're having. Because if you look at the tax revenue split chart for last year, corporations paid $400 billion out of the $6.5 trillion in tax revenue that we brought in. Or I think it was 4.6 trillion, and corporations paid 400 billion. Payroll taxes accounted to 2.2 trillion. So the amount we pay as like employees of a company. I don't know if corporations paying higher taxes is the answer to that question. I think spending cuts are probably the broader answer, but a combination of both likely need to happen to some extent to be able to get things going in the right direction. Nonetheless, there you go, folks. Stanley Druckenmiller, not excited about the state of the economy. We are spending like drunken sailors. I do not know if the spending was ever going to stop, especially it's probably not going to stop if we have Democrats in office. That's just the hard reality of it. Democrats tend to spend more money. But look, Trump also spent money as well. So I don't know what's the solution to this problem. Maybe the solution, and I hate to say it. You know, I hate to say it. Maybe I shouldn't hate to say it that much, but I hate to say it. Maybe the solution, folks, is you've got to buy Good old Bitcoin. You like the segue? That was a good segue. Let's check on Bitcoin right now. Maybe this is the only thing that is a proxy against this ridiculous government spending. 34,885 up today, 0.57%. Look, Bitcoin's been doing well. And the reason I'm starting to like Bitcoin a little bit, me getting likey, is because Bitcoin's doing what it's supposed to be doing. It's kind of hedging against a lot of the crazy shit that we're seeing in government spending and inflation. Obviously, if growth stocks do well, Bitcoin probably will continue to do well. But if Bitcoin keeps performing inversely to a lot of the stuff we're seeing, it actually is going to be a quote unquote store of value. And we'll see where Bitcoin continues to go. But it's maintaining this 34,000 level that it broke out of like 27,000 a week ago. And now it's just stayed there. Solana, let's check on that as well. Solana is, oh, that's weird. Does Webull have Solana? Let's see, Solana. Okay, it might not have it. Let me check on Robinhood. I want to check that one. I have a friend who's heavy into Solana, so that's the only reason I'm interested in that one. Solana, oh, it's up today, 3.86%, up $40, up 20% in the last week. So for those that have Solana, Bitcoin, Ethereum, I'm sure you're doing well on some of those investments, and we'll see how crypto continues to go. Wouldn't precious metals be another proxy? Your thoughts on silver, gold? You know, I'm not sure. I'm not sure if I don't know enough about precious metals. I can see the logic for why it would be another proxy. Gold, I think. Where is the price of gold right now? Gold has doubled in the past decade. Okay, gold was 1,000 back in 2010. Yeah, gold is at 2,000 right now. Let's actually look at this, and then I'm going to look at that Paycom company that we had yesterday. Because I didn't even know Paycom was a company. So here we go. Let's do a little bit of crypto stuff and see different things that are going on. So gold right now, if we look at it over the past 6 months, is barely up. Year to date, it's up 8%. In the last 1 year, it's up 20%. Last 5 years, it's up 61%. So gold, if we look at the max chart, gold in 2012, 2010, yeah, right here, 2000. Basically 2012-ish, we got to a low of 1,200, and now it's at 2,000. So about 80% since then. I don't know if gold is the best proxy against rising inflation and drunken spending. As if you look at it just in general, it looks like Bitcoin is probably the best proxy just from a pure asset return perspective in the context of what's going on with spending 109% year to date. I know there's a lot of catalysts coming on for Bitcoin, the spot ETF, and the halving event that's going to be coming. But one could argue that government spending being insane and the government really not having their shit together is another reason for why Bitcoin enthusiasts are getting a little bit more excited right now. And so that might be, another reason why it's up. Chris says Solana now runs on Google Cloud. Of course, Chris has to find his way to plug Google, which took a beating after earnings, but Solana does run on Google Cloud. Matt says, I'm heavy into Solana. I'm your friend. No, I have another friend who's into Solana. His name also begins with an M. So I guess people who have names that begin with M like Solana. But Solana is another one of those altcoins that's like a better altcoin than all the other shitty altcoins that actually has some more utility. And that one is doing well, a lot better than other assets. Henry says, I've been in government for about a year now. All I can say is that we need to maintain spending. Otherwise, our station regional offices receive less money the following year. See, this is also the problem, right? Because Henry is making a correct point. The government has to spend money. It's not like the government can stop spending money tomorrow. Like, we need to spend in order for things to move forward. That's why if we have a government shutdown, it's cataclysmic, not only for the government, but for the broader equity markets, because you need the government to spend. The problem is where the allocation of that spend is going and where it can be reduced in a way that it can then be allocated somewhere else that can be better. So for example, did we need to give Ukraine $100 billion? And this gets into a much broader question of like, well, Western values are on the line. And if Russia takes over Ukraine, they're going to want to invade other countries. And then China's going to invade Taiwan. And we can't let those communist values actually have some type of mainstay. We fought a whole fucking Cold War to like stop this type of stuff from happening. But then you also got to look at the other side, like, well, $100 billion invested in America maybe allows us to protect our values, even if the rest of the world can't protect their sovereignty and their freedom. A lot of this comes down to like, do we believe in freedom and how hard are we willing to fight for freedom? Which is kind of why I have a theory that eventually humans are going to go extinct, not because of nuclear war or climate change, but because we're just going to kill each other. Like, if you really just go deep, and sorry to be so pessimistic, but we hate each other so much and we have values that are so conflicting America is for all the shit America has, it is the greatest experiment in human history for people that vehemently disagree that can come together and still live in peace. And that just doesn't exist all over the world. And I think given what we're seeing across the world, there's going to be a point, maybe in the next 50 years, 100 years, where we just drop a nuke on each other and we're like, you know what? It's over. Because at some level, if we can't agree on spending cuts, if we can't agree on religious differences, I don't know how we're going to survive. I really don't. I believe this too. I don't even think that's it's as controversial of an opinion. Like it's just a tough place that we're living in right now. And so we're going to have to end up figuring out how do we agree with each other. But regardless of if you agree or disagree with each other, Bitcoin is up, gold is up, Solana is up. The thing that's not up is Paycom. Can someone tell me what the hell Paycom is? Like what is this? This is Paycom software. This yesterday was very interesting to say the least. I'm like, Paycom? What the heck is Paycom? I didn't even know this was a company. So it was trading at $244 a share. Dropped pretty badly to 166. This is like a meta 340 to 240 drop back in February of 2022. Paycom was founded in 1998. It's run by a Chad. So Chad might have been partying yesterday instead of paying attention to his earnings. PayPal, I'm just no shade, Chad. It's just a little joke. Is an American online payroll and human resource technology company in Oklahoma City. It's attributed to being one of the first fully online payroll providers. Okay, so if this is a warning for companies that have pay in their name, then folks, we're going to lose a lot of money because I know a lot of people here have some PayPal. Shares in Paycom were down 36% in pre-market. They're losing about $5 billion in value. See, this is how crazy the public markets is. These are companies that are public and we don't even know that they're public. Let me actually pull up something else that I want to show you guys. But Paycom, I'm joking here. It seems like their guidance was really bad in the context of where their revenue is going towards payment processing. And I don't think that affects PayPal because PayPal is in a totally different business line. I mean, it's the same business in regards to payment processing, but it's a different use case for that business. But it is concerning that companies that process payments are down. That's my payroll. Oh, so some of you guys use it. I've used Gusto before for payroll. I know that's a big one, but I haven't used Paycom. I did a poll yesterday on Twitter. If you're not following me on Twitter, by the way, please take a moment to like the stream. That would be awesome. Just 1 second, like the stream and follow on Twitter. It's in the description. Please follow on Twitter because then you'll get to see all my updates on what's going on in the market. 632 votes on PayPal earnings tomorrow. I said, look, is it going to be PayPal or will it get PayPal? 55% of people think it's going to be PayPal. I think it's going to be PayPal as well. I don't know if transaction margins are going to be enough for the street to get excited. I think Braintree is going to show the type of growth that they need to show. I think our monthly active users, it went down last quarter, I believe. I might be wrong on that, but it went from like 432 to 431. It might continue to not necessarily be going up. And if PayPal doesn't show an increase in MAUs, that's not the biggest metric for them like Robinhood, but that's definitely not going to be good. Now, granted, they're number 40 on the entire App Store, number 48. So I do think new people are using the platform, but if in terms of net new like users for the month, I don't know how many PayPal is going to get. So we'll see where PayPal is going to go, and then we'll go from there. Adam, yes, I would love a guess. Adam, right after the market open, I'll get you in at 940. We'll talk Palantir and SoFi. So I'm going to send you the link, and then at 940, just join, and we'll get you in. All right, folks, so you saw it live. Adam's going to be joining us for the market open. We haven't had Adam on in a while, so I'm excited to have you on, Adam. And you can give me a break from talking because I don't think my voice is recovered yet. But we'll have you on at 940. I sent you the link just now. So that's PayPal. We'll see what happens. I think the biggest thing I'm looking for is, hey, can your MAUs stay stable? Can your transaction margins get up a little higher? Street is looking for about $8.7 billion, 8% year-over-year growth in the context of their revenue. And if PayPal just doesn't shit the bed, we're going to be okay. Now, remember, SoFi shit the bed. SoFi didn't shit the bed, but their stock price shit the bed. And the market still, basically said, hey, we don't like you right now. SoFi is up right now in the pre-markets, which is nice. Up 1%, $7.63. But they had a triple beat, 717,000 members. The market wasn't happy. I say all of this to say if PayPal doesn't have a good earnings, even on a stellar earnings, you get hammered. So if PayPal doesn't have an amazing earnings, they're going to get hammered, right? It's just going to happen. It's, we know that's going to be the case. So I'm hoping for the best for PayPal. I've got 10,000 in the stock. I've got a lot less than a lot of other people. I know a lot of people who have hundreds of thousands of dollars in PayPal. I have a good 10 grand, which is a lot for me. So in that 10 grand, I'm hoping that this stock that has just been decimated maybe show some progress today. The other thing is PayPal, I think it's one of those longer term plays, right? It's one of those companies you want to, it's not a tech company like Meta, so it can't just cut costs and aggressively move forward because their margins, their growth is just not the same like it is for Meta. So it's not really Meta at 88, but valuation is Meta at 88. Maybe the time frame on which it becomes a Meta at 88 recovery is different. It might be 3-4 years, or it might be the next 7-8 months. And I think all of us will see how that story plays out. But today we'll get earnings and we'll see what happens. First day of November, folks, and PayPal reports. So it's a nice way to start November. Palantir, we'll talk about it with Adam in about 15 minutes. Palantir right now at 14.80 in the pre-market. No, 14.95. So close to $15 in the pre-markets. We are going to see what happens with Palantir. I can't even believe earnings is tomorrow. I will be live streaming it 7 a.m. starting tomorrow. Make sure you're here. You've got to be here. It's Palantir earnings Q3. This is a company that we dissect in terms of the community from so many different sectors, from so many different perspectives. The fact that we're getting new numbers tomorrow, a new earnings call, Carp has new statements. We're probably going to hear what's going on, at least a statement from them, I'd imagine, from Israel, new revenue numbers, new customer count. There's so much to dive into tomorrow that I can't even believe it's happening tomorrow. And so very, very excited for Palantir earnings. Obviously, the stock is going to do what the stock does, but we're going to get more updates on how one of the most innovative companies in the world is performing. And I think that's an important thing to see, as an investor going into the new year, 2024. So we'll get Palantir earnings soon. Pinterest maintaining its bump from yesterday, up 20% since yesterday, now $29.93, almost hitting $30. Truist down a little bit, $28.34. Enphase continuing to get hammered, $79.21 in the pre-markets. Enphase is just in a tough predicament with these interest rates. And same thing with Tesla. Tesla was at 197 yesterday. Now Tesla's at 204, up 1.64% on the day. The dip was bought on Tesla. We'll see if it continues to get bought. In S&P 500 at 419, up 0.26% on the day. SoFi up about 1% in the pre-markets. What's up, Amit? It's Christmas season now. That is correct. It is Christmas season. Where's Mariah Carey? We gotta play that song. Austin, thank you for being here. Carp possibly reporting from London because of the AI summit. That's another thing. I'll drop a daily Palantir tonight. Haven't dropped an episode in about 5 days, and I'll talk about Carp at the AI summit and the upcoming earnings. But that's another thing that's going on in regards to everything that's happening in the UK and in regards to AI. All right, folks, 20 seconds until this market opens once again. Here we go. We've got to see where the world is going on a big day. We've got the Fed either raising or pausing. We've got PayPal. We've got Palantir tomorrow. Let's see what happens. The cowbell is back. Thank you, 700 people, for being here with me. 9:30 a.m., November 1st, 2023. The stock market is once again open. Wake your ass up. Here we go. SoFi starts off the day fresh, 2.11% up on the day, $7.77. Not bad for SoFi. Dutch Bros, 24.34, up 2.4%. Palantir, $14.87. Palantir, not bad at all, up today, 0.17%. We'll talk more about them in 10 minutes and see what earnings expectations we have. But Palantir at $14.84. Enphase starts the day lower, down about 0.6%, $79.09. Truist, $28.32, up 0.4%. Tesla, $203.82, up 1.52%. Elon Musk went on Joe Rogan yesterday, spent 3 hours talking to him about everything from Twitter to Tesla to Cybertruck to climate change, a variety of issues. I have not watched the podcast. He was smoking on the podcast. It was a cigar, so it wasn't weed anymore. So maybe investors won't kill him for doing that. But he went on the pod and he spent a lot of time discussing a lot of different issues. So I'm sure in the next couple of days, we'll get some more updates on different things he said on the pod and things that matter. One thing that was pointed out was that he said Cybertruck is on track to produce 200,000 vehicles next year. Whereas on the guidance earnings call, they said 250. So there was, maybe that was just him spitballing numbers. It wasn't that serious, but those are some of the things people took away in regards to him, specifically talking about Tesla. Uber at 43.43, McDonald's 263. McDonald's earnings were very good. Revenue was up 8% year over year. Meet Kevin's PP up 9% on the day. I don't know what's causing that. $20.67. It might be NVIDIA because NVIDIA went down a lot yesterday. He does have a position in NVIDIA, so that may be bringing it up a little bit. So we're seeing that one up 10%. NVIDIA 411. So that dip at 390 has been eaten up on NVIDIA. For all the people that thought NVIDIA was overvalued, the market continues to give it that quote unquote overvaluation at $400. The market likes NVIDIA there. They don't let them stay under 400 for too long. Microsoft at 340, staying in that 340 level. That's very good for Microsoft. Ford at $9.80. GM 28.48. We officially have a resolution to the auto worker strike. I believe this was announced yesterday or on Monday, that it's done. From my understanding, I have to go into it deeper, but I think it's done. There's a tentative deal, and it's just going to wait to be signed, which is great for inflation because we need to make sure that the used car price index doesn't go higher because demand falls off for new vehicles because there's not that much supply. So I would hope that that is a positive catalyst for inflation going into November. Meta at 303, Google at 124. Google continuing to get hammered, even though it's up on the day, but obviously down dramatically from that 140 level. Snapchat, $10.03. Spotify, 165. MicroStrategy is up a little bit. Riot is up at 1.43%. The Bitcoin stocks are tending to do well today. CleanSpark up at 1.79. Rocket Labs, $4 for 4.150 on the day. And Novix, $8.93. ASML back at 600. This fell from 600 on earnings, right back up to normal with the other semis. NASDAQ, 12,893 on the day as well. Martin says Elon needs to stop fixating on Zuck. So tired about him talking about fighting him. He did mention fighting Zuckerberg. Look, to me, as someone who admires Tesla, that is why Elon is Elon, because he'll go on a Joe Rogan podcast and say he's going to fight a billionaire tech CEO, right? Like, it's so stupid, but it's fun. That's why he talks about it. And I don't think it's, that big of a deal of him doing that type of stuff, but he does say that. Yvonne says hikes or raises. I did mess up in the title. I said Jerome Powell, either hikes or raises today. I guess I wasn't thinking in the morning, but maybe I know something about what's going to happen today. So it's either hikes or pauses, and more likely or not, we're going to get a pause. SMCI at 246, Taiwan Semi at 86.89, Lululemon 391. This was at about 410. It got into the S&P 500. Now it's down at 390. SoFi needs 4 consecutive quarters of GAAP profitability to also get into the S&P 500. One could argue in the next 18 months, SoFi and Palantir would be in the S&P 500. Another big thing about Palantir now down 1.49% on the day. If we're GAAP profitable tomorrow, if we have 1 cent per share of GAAP profits, generally accepted accounting principles, those 4 words have never made me feel so excited before, we will be eligible, because we meet all the other requirements, to be in the top biggest 500 most important companies in the world as per the S&P 500, which means fund managers will have to buy the stock. Maybe that's the catalyst that'll pump the stock higher a little bit. We'll talk about it in a couple of minutes with Adam. But I don't know if the revenue numbers are going to be good enough for us to really be excited. Another thing on Palantir today is RBC Capital reiterated their $5 price target on this company. So RBC, Rishi is the name of one of the dudes at RBC. He does not think Palantir is an AI company. He actually agrees that they're similar to this AI imposter. And so he reiterates a $5 price target and an underperform. He says, we recognize that being on the sell side, we have the luxury of being long-term negative on the name, while it could be less prudent to sell the stock in the near term, given the most aforementioned risk, even if we can't rationalize why Palantir is the most expensive stock in software. They say government data looks weak, valuation too expensive, well above the peer group, which in our view does not fully reflect the business model risk. It's interesting that they say a couple of these things because, when you say it doesn't, the valuation is too expensive and it's well above the peer group, Snowflake is valued at $50 billion. Databricks is valued at $43 billion. I know Palantir is not growing as much as those companies, but a growth stock is not purely valued on the growth rate in the near term. It's valued on the growth rate in the long term. And you're willing to pay that extra premium per dollar, that extra multiple, because you believe the growth will be there. And so that comes down to a qualitative analysis of Palantir, not necessarily a quantitative analysis on, do you think the growth will be there? And so when they say things like government data looks weak, and then Palantir got a $250 million AI government R&D research contract 3 weeks ago. I mean, the NHS contract is going to be about $500 million, which is government revenue. I don't know. A lot of these arguments are silly. They're not that strong and interesting. And maybe some of those arguments don't necessarily make sense. Arnie in the chat, he'll be joining with me tomorrow on the live stream. We'll be here 7 a.m. Eastern. So make sure you are here for me and Arnie. He says, how can we short the RBC analyst? I mean, look, if he said $11, $12, I would get it. $5 is just pathetic as a price target. And you're looking for clicks at that point. And if you're looking for clicks, you're looking for clicks. That's okay. But just be honest, bro. You're looking for clicks. $5 is not, it's not one of those biggest things. The other reason we were speculating why Palantir is going to do they're going to do earnings in the pre-market in the beginning. One of the reasons might be because Carp's going to be in the UK. So apparently Carp is going to be in the UK, and that time zone is messing up everything, right? In regards to how they traditionally do earnings. So maybe that whole speculation of, our earnings going to, suck because they do it in the morning. And historically they've done it in the morning and that's been bad. It's literally seems like it's just a scheduling thing. And if it's just a scheduling thing, then that's hopefully not going to be too bad. Chris Patel, there you go in the chat, ladies and gentlemen. I got to see Chris talk bullshit or his BS about Palantir, his shit in person, right? So we were in the car saying, Palantir seems expensive, and I'm listening to him in person say this. So it's different seeing him in the chat say this. Garcia was there as well. Chris Patel believes Palantir needs to be below 8. Well, we'll see. We will know soon enough in a couple of days if Palantir actually gets there before 8. And look, $8 times 2.5 billion shares or whatever, it puts you at a $20 billion market cap. You can make the case for that price target. The problem is I feel like it takes away from so many of the catalysts, so much of the future growth, so much of the, hype. And I don't say that in a negative way around AI and the general market, that it does a disservice to give it that price target. I mean, a lot of companies probably don't need to be as high as they are right now, but there's a reason they get a little bit more of a premium. And that premium is not the worst thing in the world, in my opinion. It's just a question of how big that premium gets. 18, 19 bucks. Yeah, that premium is a little high. But if that premium is lower to 13, 14, I don't think that premium is that crazy. Let's take a look at one clip kind of underscoring why AI is going to be important for not only Palantir, but a lot of companies going in the future. And then in a couple minutes, we'll have Adam join us to talk specifically Palantir earnings.
Box, AMD issuing weaker than expected guidance.
And AMD had earnings yesterday. We'll talk about that as well.
After reporting an earnings beat despite deteriorating demand in its gaming business. Now, the company is forecasting more than $2 billion in sales for 2024, saying that's for its AI chip designed to compete with NVIDIA. But tightening U.S. regulations on AI chips sold to China could also be posing challenges. Chris Casso is a managing director covering semiconductors and semiconductor capital equipment at Wolfe Research. He joins us with his analysis of the AMD situation.
And remember, AMD and NVIDIA and their earnings matters for Palantir because the less demand there is for chips, the less AI training is going on for software companies. So, Palantir is a derivative demand proxy for what's going on with NVIDIA and AMD.
But maybe we should just go broader with the whole industry, given that there's real questions about what China is or what the rules are going to be around China, Chris.
Right. Well, and maybe we'll start with AMD and use that as an example of what's happened in the overall industry. And AMD is a pretty good example of that because the correction in semiconductors started last fall. And some of those segments that corrected last fall, such as PC and data center servers, are starting to get better now in the second half. And AMD talked about that. But you also have some segments of the market, and in AMD's case, the former Xilinx business, which is a very broad business that covers things like communications and industrial, that's starting to weaken. And that's the reason why the numbers are coming down now. So there's a bit of a mix. But the probably most important thing for the stock today has been that they quantified their opportunity for artificial intelligence next year. And they talked about a $2 billion number. And that's from close to zero earlier this year, a very fast ramp. And of course, that's the secular thing that's growing as you go into next year, which is driving the space now.
So as you look at the sector right now, if you could own one of these stocks, given where they are, given whatever you think value is, if there is value, given the multiples on these things, which one do you like?
Well, AMD's been our top pick. And if you go back to last year, it was in NVIDIA. And obviously that had a really good run. And, we're a big believer in the AI trend going into next year. And for AMD, just being a smaller company, and we don't expect them to have the same position as NVIDIA, but it's a big impact for them. And the stock hasn't moved as much. I will say that NVIDIA has had to move back here, partially due to what you spoke about and some of the fears about China. And we think it's an opportunity also for NVIDIA. We like that stock into the long term because right now, the China restrictions for NVIDIA aren't going to affect them in the near term because there's supply constraints. There's plenty of customers who want what they have.
AMD earnings were actually really interesting for a lot of reasons as well. I'm going to pull up the numbers right now. The China thing affects AMD and NVIDIA. That that China thing, that China bill that was passed a couple of days ago. Not really a bill. It was more so this like reiteration by the government that they're not going to be able to continue to do what they were doing in the past, which is sell these chips into China. And this was announced in August, but then it kind of became official a couple of weeks ago. Revenue for AMD, $5.8 billion versus $5.7 billion, EPS 70 cents versus 68 cents expected. Fourth quarter, AMD expects $6.1 billion in sales, while analysts were looking for revenue about $6.37 billion. So that's why they were showing the revenues coming down just a little bit, or their guidance is coming down a little bit. But remember, the reason, and that's why the stock dropped a little bit in extended trading hours, 4%. But they're overall, they're making enough chips to fulfill the demand they have. And the question simply becomes how much more GPU demand is going to have from in the context of data centers over the next couple of years. Lisa Su says, we now expect data center GPU revenue to be approximately $400 million in the fourth quarter and exceed $2 billion in 2024 as revenue ramps throughout the year. This data center revenue, I believe for NVIDIA, was like $10 billion last quarter. That's what I remember. And that number is the number that really spiked NVIDIA after earnings. And so we will continue to see where these chip manufacturers and chip designers get in the context of revenue. The more of a premium they get, the better they're going to be doing, and the better software companies are going to have a premium in regards to people being excited for AI demand, whether it's from chips, and because of those chips and GPU demand, then into software for all the training that is being done to make AI even useful on these software companies. All right, folks, I have a guest with me. I haven't talked to this guest in a while. I was on the phone with him a couple of days ago, and we were talking about Palantir. We were talking about SoFi. We were talking about everything. And then he had someone at his house because he's doing business all the time, so he had to hang up on me. But he's back. My guy, Adam. How you doing, buddy?
I am doing fantastic. First of all, do you hear me okay?
We hear you great. Your mic is awesome. You look like you're in the Matrix, so I'm very excited to see what thoughts you have for me about Palantir since you're in the Matrix.
Yeah.
And,
Funny thing, I got the same mic. I got the same mic as you now. I didn't know. I didn't realize I did. I got a Shure, but I got the USB plugged in one, so it's actually really good. First, I wanted to say something. I called Amit, but he was either twisted, gambling on drunken, drugged bender with hookers. I don't know exactly what he was doing. I know he was having a lot of fun because he usually answers his phone. So I want to say something. I want to say big, and I said it in my video, but you were definitely hungover. I want to say huge congratulations to Amit, man. The guy is 26 years old, guys. 26 years old. Just ask yourself what you guys were accomplishing at 26 years old. Like, seriously, it's really
Dude, stop.
amazing.
You're gassing me up way too much.
I'm not. I'm giving you props, bro. I'm giving you props. You're working your ass off. You're hustling like crazy. Who knows what the future is going to bring? But very few people have the capacity to start something, and even fewer people actually have the balls, the grit, the determination to actually follow up and try to accomplish that goal. So I wanted to give you a huge shout out, and it shouldn't be overlooked. So yeah, big happy birthday, and good for you, man.
I appreciate it, man. I appreciate it more than you can imagine. And you're one of the reasons you've been here this whole journey. You met me randomly 2 years ago, and you decided to support, decided to invest in me, decided everything. So it means the world. And a lot of people I met at Vegas were people who've either invested in me, they care about me, they support me, and it's just like the amount of just love and appreciation I cannot even express how blessed I am at this age to have a community of people, even if it's just like you on the phone randomly giving me advice, given you're a lot more accomplished than me at 38 years old. You've made many businesses, you've made millions of dollars. It means the world. So I appreciate you being here, man. I appreciate you joining me. And let's see if we can both make some money tomorrow on Palantir, or do we both got to buy the dip and go into more debt?
So first of all, anybody that's not taking advantage of covered calls, I go over it with my channel members, making stupid premium, guys. Stupid premium. I mean, you could have sold a $20 covered call on Palantir and you were getting 4 or 5 cents per contract, which comes out for essentially every 100 shares that you have of Palantir, you're making $5. Think about that. You're making 5%, right? On not 5%. I'm sorry. Anyways, doesn't matter. I think that we're going to be doing really good, but all I care about is what's happening with the AIP. And that's frontline and center. We have a lot more marketing, a lot more public relations. I'm not going to be too excited with revenue right now. I think we're supposed to do 13%. That's all great. I'm looking for forward guidance. More importantly, I'm really looking forward to second half of 2024. So I'm not really going to be disappointed if we only hit 13. Obviously, I'm going to be, sad about it, but I'm not going to be like, oh, you guys suck, right? Obviously, I want to have a beat. But if we can even get 15, 16% like we did 2 quarters ago or 3 quarters ago, I think 2 quarters ago, that would be great. And most importantly, get the gap profitability so we can get into the S&P 500. So I'm looking at growth for AIP specifically, growth in general. And I think that we're going to be getting a lot of contracts from the military right now with what currently is happening in Israel, with what currently is happening in Ukraine. And yeah.
So this is what this is what consensus is. If we get 555 million, we would have 16% year-over-year growth, which is better than that 13%. The top line is expected to have benefited from strength in government and commercial contracts. So if they even get us 555, 557, we're going to be closer to 20% than we were before. And then obviously we are expecting to be gap profitable. Let me ask you this question, Adam. What do you think? So the stock was at $18 after this whole Israel situation happened. 18.40 was the top. Now it's back at 15. What do you think sends the stock to $12 tomorrow if you have to make a bear case? Like just absolutely crushes the stock. What would they have to do for the market to be like, damn, we cannot own Palantir right now?
If Palantir loses certain clients, if Palantir's growth is not there in terms of AIP, let's say their AIP growth is no longer there, like they just can't grow it. That's going to be the main thing right now. Like that's what people are paying attention because this is like the new thing. This is the new frontier. This is the promised land that Palantir is supposed to bring us to. This is the product. This is supposed to grow as fast as Foundry for commercial. AIP needs to grow just as fast, which is going to increase our net dollar retention at the end of the day. Because if you're using Palantir AIP, you are already a Palantir Foundry client, which we see with a bunch of the different, demos that are currently going on. So if, for example, he says something like, we're seeing a decreased demand in AIP, this is going to be bad, especially because we can't give away for free AIP. This is going to be really, really bad. If tomorrow somehow, some way and I don't know what the perception is, Ukraine loses the war, right? Russia takes over Ukraine. The Palantir stock is going to drop because we're kind of tied into that. Now, if Israel's operation right now that I believe Palantir is strong into it is going to come out as an announcement, which is not going to be tomorrow's, earnings, but like next earnings or something that, Israel's casualties were very small. And the reason why is they were looking for the terror tunnels and they were able to detect it using Meta Constellation, that brings up the price because right now Palantir is tied into America and their allies, right? So
do you think they make a statement tomorrow on what's going on? I mean, they said we stand with Israel. It would seem appropriate to say a couple sentences about it. Do you think they would?
Yeah, I for sure see it. If they supported Ukraine and made a sentence of Ukraine and they talk about NATO, it will be extremely shocking if they don't, because they literally took out an ad for Palantir. And, there's many reasons for that, but just look at the founders of Palantir and then look at the advisors of Palantir and then look at their general statements and their general thinking besides for who they specifically are. So this is besides for Palantir as a company and as a motto, a thesis, the founders are very intertwined with what's happening right now in Israel, right?
I agree. And we'll talk more about Israel in a second, but I do think they're going to make some statement on Israel. I think you can't buy a New York Times commercial and then not make a statement during earnings about it. I agree with you. Revenue, I think, is going to be 555 to 557, 16% year-over-year growth. Customer count last quarter was 8%. So we need to have that going up quarter over quarter. So that needs to be 9%. So I think we had 31 customers last quarter, 38. We need to have like 45 or 46 or something, right? So we need to see that number go up. We're at 420 customers right now. We need to see that go to like 460, 450, whatever it may be. And then on top of that, we need to be gap profitable. Now, if we become gap profitable, do you think the S&P 500 cloud that's hanging over us is going to affect the stock? Because I don't think it's going to matter that much tomorrow. I think it'll matter later.
No.
But do you think it would have
not at all tomorrow? It's going to be more when we get the actual announcement. For example, like whenever there's a stock split or the announcement that S&P, like any of these big announcements, the run up to the actual event, once we get the announcement, the stock price starts going up and then it drops after that and then it evens out in the future. So
correct.
Tomorrow we're not going to get any announcement because we still need to be reviewed, right, for S&P 500 inclusion. But it's extremely important that we're gap profitable. It's so funny that we never get our flowers. Nobody gives us our respect, right? So we weren't supposed to be gap profitable for quite a while, and right now it's been a year. So we get gap profitable 3 quarters ago, I'm sorry. And people are like, oh, this is only because interest rates are high. You can't maintain this. There's no way you can maintain this. You know, that's because of a one-time offset. You sold part of a company. You know, you guys ended up getting a bunch of revenue, but you guys can't maintain this. You can't maintain this. Well, lo and behold, we have 4 quarters. Well, hopefully 4 quarters of gap profitability, and we're getting included in the S&P 500. And still people are going to be like, Palantir ain't shit. Still people are going to laugh at us. But, and I'm going to keep saying this, we have a lot of growth when it comes to government contracts right now. Like those government military contracts is not slowing down. I hate to say it, guys, but like it, hate it, bro, the world is fucked up and it ain't getting any better. And Palantir is very much needed. Maybe this is a scare tactic. Maybe this was planned. Maybe this is a conspiracy. I have no freaking clue. And I'm not going to debate if this is good or bad because I'd rather not have war. I'd rather have peace. But the world is not going to be getting any better, which means that Palantir is going to have a lot more business and people are going to get a lot more scared. And we have to keep producing this research in artificial intelligence and machine learning to counter our opposition, our enemies. Love it, hate it, believe it or not, that's what's happening.
I also think, we haven't even talked about AI yet. I was dabbling around on some things I'm working on, and it requires working with AI, and I'm doing it at a very small level, like LLMs and vectors, embedding, all that stuff I'm working on. This is like no joke. I mean, this thing is this idea of AI actually creating GDP growth, productivity booms, all that stuff. That's going to happen. I think that's why Palantir is continuing to get the premium. If tomorrow on that earnings call, investors feel that Palantir's role in AI, which is the whole reason Dan Ives and Bank of America are giving us those extended price targets, is not only increasing, but it's becoming solidified as for that $250 million government contract you're talking about we got in research and AI, that's another reason for investors to be more bullish. And if there's a dip, then maybe that dip is an exciting dip versus a scarier dip.
Absolutely. And it's, look, I cannot see Palantir not growing massively with military spending. Military spending right now on software, although military spending as a whole is going up, it's still a small fraction. I believe that the Pentagon, the first time they even asked for an AI budget, they asked for 1.4 or 1.8 billion specifically for AI. It's one or the other number. It was a total package of like 3.4 billion, if I'm not mistaken.
Yep.
And one was specifically for AI, and the other one was specifically for the JADC2, which is literally powered by Palantir. So it's insane if you think that Palantir is not going to be literally everywhere. NATO is going to be manning the fuck up after this. They are going to be manning up. Did you see the AIP demo from Ukraine? It's absolutely freaking bonkers. Think about it. He literally asked in a chat, hey, show me all of the hospitals that are damaged, show me all the hospitals that are hazardous, then show me all of the schools. And imagine if you stack this to, hey, we're getting $1 billion of funding next month. We're getting another $200 million in 2 weeks, and we're getting a shipment of a ton of lumber and then 2 tons of metal. I don't know. For example, how to best allocate this based on what's happening on the grid and what needs what resources faster, which is exactly what Palantir is trying to do, right? Give you the ability to do that. I mean, it's absolutely insane. How long would that take you to go through manually, through papers or Excel or PowerPoint, if the information is even, credible? And I don't think people are understanding that. That's my opinion. I mean, I see it like this.
Do you think Karp's going to be the UK tomorrow? So that's actually the reason it seems like we're doing it in the morning, because he's in the UK for this AI shit. Do you think Rishi Sunak's going to be sitting next to him tomorrow? They announced the NHS deal. I'm joking here, but do you think they announce NHS and they finally get it done with?
I don't know. Me and you were laughing about that for a while, and then if I'm not mistaken, Chad posted something on Twitter that says that the NHS deal is they said we picked, we have somebody already, but we're holding off on announcing it.
Correct.
Something like that.
Right.
So, I mean, it's possible that they're going to announce it tomorrow. I mean, it wouldn't really affect anything. An announcement's announcement, and big companies announce things all the time on earnings, right? As long as it doesn't affect your, insider trading, which it's not. So I actually do think they're going to announce it tomorrow, to be honest. If we got it, like it's possible, guys, we didn't get it. That is quite possible, and that is going to mess up our stock price. Like there's no doubt about it if we don't get it. I mean,
Yeah. I mean, look, I'll go on a limb and say we'll get it tomorrow. I'm probably going to be wrong about this, so don't hold me to it. But I feel like tomorrow would be the best day to announce. And remember, companies collaborate with partners to announce things on certain days. Like a silly example is Rumble. Rumble announced a ton of partnerships with content creators on their last earnings.
Yep.
Because they want to announce it on a day where they have attention on the stock. So you never know. Palantir might just announce it. Karp did an interview with BBC. I think they're getting ready to do this whole kind of press run in the UK. What were your thoughts on that interview? And do you think that also is the reason we get the NHS deal? Because now he's talking to the British media.
All right. The interviewer was absolute, in my best British way, shite. She was absolute shite. She was terrible. BBC is a freaking disgrace as always. But I have a lot of bias on them for everybody knows why. But anyways, BBC is disgusting. And Karp was a G. He straight up carped her. Once you go carp, you'll never go dark. And he did a really good job reiterating and pounding the idea that, he literally says, this is paraphrasing, we don't have your fucking data. And even if we did, we wouldn't use it, but we have no fucking access to the data. And then he's like, the reason why you guys are scared is because other companies have to sell your data, but that's not Palantir. We can't even sell it if we wanted to. So she's like, yes, but the data could be sold. He's like, not by my company, by your government, but not by my company. Like, it's so crazy. Yes, the data exists. The data goes somewhere, but they don't have access to it. And he keeps and then towards the end, I feel like she started to understand. And he's like, bro, I can't do shit with that data, even if I wanted to, because I don't have access to it. Yes, in theory, it is somewhere. But it's not going to be it. So he's like, and the point is we need to protect the data as much as possible. And then didn't they come out with Cleveland Clinic yesterday where Cleveland Clinic just keeps doing, like, everything in healthcare that they're touching is getting, better and better. Like, even Chris, who's probably a huge bear on Palantir, gives them certain props, right? He's analytical. I'm assuming that Chris would even say, you know what? They're doing a good job in healthcare, right? Reducing the waits because he's in the healthcare industry. I spoke to some people in the healthcare industries, nurses, things like that. And I spoke to them and they haven't used Palantir directly or indirectly. Maybe they're using it and they don't know. But when I show them, this program, they're like, this is the huge problem for us. We're still doing everything analog in the dark ages, and it's super hard to coordinate. So, I mean, NHS needs Palantir.
Yeah.
Palantir needs NHS. This stupid notion that Palantir doesn't need NHS is the stupidest shit I ever freaking heard. There is no way in hell that Palantir does not need NHS either. Guys, they made $100 million worth of contracts over the last 3 years with them. 4 years, I'm sorry. Just think about that. And a $600 million contract is still a $600 million contract. Don't let these fools, buffoons, idiots tell you anything different. Very much so, NHS needs Palantir. Very much so, Palantir needs NHS for the absolute doors that it's going to open up for Palantir.
I was going to say, I think that's the thing. The doors that are opening, right? 600 million is like a lot of money and that matters. But like, if we fix the NHS, dude, like that's like, that's not an easy thing to do. And I think there's just so many opportunities in the future if we're able to fix the NHS as well.
Absolutely.
Okay. So I agree with you. I didn't get I was in Vegas when that Karp interview came out. And like, I woke up like hungover at 2 p.m. and I saw this new Karp interview. I saw Twitter going crazy over it. And I was like trying to understand it. And all I can remember is this lady like interrupting him all the time. I'm like, but he says we're not selling the data. And she's like, but you could sell it. He's like, we're not going to. And it's like, I get why they're not trustful of companies. GDPR in Europe is a huge thing, right? But Palantir's got to prove their point that they can trust them. And I think if we do, we're going to win. Let's end it off talking about Israel. Do you believe Palantir is being used in Israel?
Yeah, absolutely.
And for what use cases do you think?
So there's a couple of all right, you got to follow the breadcrumbs, but there was an interview of Dr. Karp and somebody that works for Palantir, and the guy's name is Ethan something, and he held a high-level position. He's an Israeli guy, and I believe he worked for the government, if I'm not mistaken.
I think he worked for the Netanyahu's. He was the CTO of Netanyahu's government office.
Yeah, so that's one thing. Two, there's mentions of Karp always gives Israel props, and although he says we're number one, he's like by de facto there has to be a number two, and it's a distant number two. But he says it would be like America, Palantir, Israel, and then like everybody else. So he always gives them props too, right? And he says that many times in the interview. Like people says, "Who's number two?" And he's like, "It has to be Israel, but it's not like a close number two." But he gives them props all the time. He has a huge office in Israel. And honestly, I think Iron Dome is being powered by Palantir. If you understand how Iron Dome works, there's a central radar system, and then there's 2 or 3 towers around it that shoots out the Iron Dome missiles 2 at a time. And it only shoots at missiles that is going to hit a target that's populated. So if the missile is going to a garage that's empty, it won't intercept. If it's going to the sea, it won't intercept. Or if it's hitting desert land, for example, it won't intercept. And it needs to make these decisions in real time, processing millions of data points, trajectories, and everything specifically for that location. Like, I don't know if Israel came out, with this technology themselves, it's amazing, but it seems like it's Palantir. I could be wrong. I'm completely just, my hypothesis.
Hypothesizing, yeah. It's not a bad hypothesis either. And even if it's not being used in the Iron Dome, the argument now is that if they're having this ground invasion, same thing with Ukraine, right? Like Meta Constellation being able to have geospatial intelligence and make decisions and just call on a company to be in the background to help you. Maybe it is Palantir. I also think Palantir, because there's a lot of controversy right now about what Israel is doing, if they're doing it the right way, all that stuff. And that's a whole different discussion. But Palantir said they stand with Israel before any of this stuff happened. And so I don't think you go out of your way to align yourself with another country unless you know that there's something behind the scenes, because otherwise there's so much geopolitical risk, so much investor risk to just say that. Like, why would they say that and then have nothing to gain for it other than the moral sympathy of saying it, which is great, right? But as investors, we want results too.
Look, and then if you believe it or don't believe it, Palantir was able to find bin Laden for the U.S. government. And the times, right, if I'm not mistaken, Iron Dome is 2011, Palantir 2008.
Yeah.
They keep upgrading the abilities of these things. It's in coordination with the United States. Israel shares technology with the United States. That's one of the few countries that gives back as good as it gets. So yeah, we take funding, but we literally develop technology. And maybe we find use cases for Palantir, right? Like if there's no Iron Dome, there's no use case for an Iron Dome for Palantir. So we can find use cases. We share this with the U.S. U.S. uses this. Palantir increases their contracts with the U.S. and military. But if we can find bin Laden, you think they're not helping them find terrorists in the terror tunnels right now? Like, think about it. Those are like caves. So they need to know where to attack, how to attack, where everybody is. So I think they are, and they're going to increase their presence dramatically with what currently is happening in the Middle East. And I think they're just going to keep getting a lot more contracts besides which is the Middle East and the United States through NATO.
Yeah. I mean, look, we'll see what happens with Israel. I think you put out a good case for why Palantir is involved. And, hopefully I think a lot of people want Israel to win at the end of the day. And if Palantir can help them, then that would be a good thing. I think the next biggest thing is like, obviously, AIP customer growth has to be there. They said they had 200 customers last time, growing 50% month over month. That was that AIP con. Those boot camps, hopefully, if they're working and Palantir is able to grow customer count, maybe that number goes to 300. I mean, we saw some of the quotes, right? These data engineers being like, we're accomplishing shit in 5 hours that we couldn't do in 8 months. Like ridiculous proof of concepts that they're building. If that leads to more AIP customers, which doesn't mean they're getting revenue, but they are legitimate customers in the pipeline, I think the market at least has to be interested of like, how are you growing these many people month over month to use AIP? And then when you turn the revenue thing on next year, hopefully that ends up, monetizing a lot better.
Even in the BBC disgusting interview, they said like you were not warmongering, COVID mongering or something. You remember she said that term?
Yes.
Some dumb shit. And and he's like, what's wrong with that? He's like, if my product is so good and I tell you, hey, give me $10 million, you're going to say, are you out of your freaking mind? I don't know what the fuck you're selling me. He's like, but if I offer it to you for free, essentially, of course you're going to use it. Now, if my product really is that good, then you're going to be willing to pay a shit ton of money. You're then willing to pay that 10 million. But if it doesn't work, then no harm, no foul. And he's like, what's wrong with that? I do this for, commercial side all the time. And there is nothing wrong with that. Yeah, I offered you the product for $1. So what? You needed it. I had it. You wouldn't have used it otherwise. What is the problem? If it's that freaking whack, you guys wouldn't have increased it 4 times. From $1, it came to 100 million, guys. Like, people don't realize that. 100 freaking million. I believe the number is like 76 million pound they gave Palantir for NHS already. Same thing happened to NIH, National Institute of Health in the United States, right? This is exactly what's happening to companies like Tyson and BP and all those companies, the top 20s that keep spending more money.
See, I think
Palantir, go ahead.
I was gonna say, I think a lot of companies can't do that, right? So that's why the reporter was like, well, you're just like manipulating the NHS's procurement process because you gave it to them for free. So the NHS is obviously going to use you. And Karp's like, well, this is a capitalist society where companies have to compete with each other, competition, in order to get deals. If my company can give it for free because we don't need that much money and because we believe in our shit so much that we're willing to give it for free because we know you're going to come back, then, and the other, Quantexa can't fucking do that. Too bad for Quantexa. That's not an unfair procurement process. The NHS could pay Quantexa $5 million. They choose to pay us $1 because they'd rather pay us $1 and give it a chance than pay something for something.
Yeah, 100%. So the thesis could work or the thesis could not work. You know who used to do this and it worked really well in the beginning, but then there was just better options and then they lost. So I'll give you the example. So if Palantir sucks, it wouldn't work. But because they're so good, it does. And I'll tell you who. Remember AOL.com? AOL Online? Remember they used to give you a disc and they used to give you a free 1-month trial? And a lot of people signed up because those AOL chat rooms were great, right?
AIM
But
Messenger.
all of a sudden, yeah. It was great. It was so good. AOL was great for, I don't know, a year. I have no idea the actual time frame. I just remember that there was a time that everybody was using AOL Online because that was all that there was. And they were giving it for free and then people used to sign up. I remember a lot of people used to do the free month. And after a while, they're like, you know what? I'll just sign up. I'm tired of redoing this every month. But guess what? Where's AOL now? Because better options came out. They weren't so great. But Palantir is doing the same thing, but they are that great. And there is literally nobody that comes close. You don't believe me? Check this shit out. So who's the competitors of Palantir? Snowflake, Datadog, Databricks, C3 AI, right? Those are the 4 that come to mind. Or like always, those are the 4 that come to mind. And to an extent, you have, Microsoft that does certain things, but Microsoft does so many different things that it's not a direct competitor. Where are these companies, right? The top AI company that just came out, number 1 was Palantir, number 2 was Google. I think number 5 was Microsoft that came out. C3 AI was last place. I think Snowflake was nowhere to be found. And Databricks was like second to last, if I'm not mistaken, off the top of my head.
You're talking about the Dressner report.
Yeah, the Dressner report, right? 2021, bro. Pure AI sales, Palantir smoked everybody. Palantir had as much AI sales. It beat Microsoft, it beat Google, it beat IBM. I think Oracle was the other one there. But AWS, I'm sorry. They had more sales than Google and AWS together when it comes to pure AI sales, right? So they've been doing this for a while, but people are not giving them credit. On top of that, why is Alex Karp and Palantir at a AI security summit in the United States and they're in an AI security summit in the UK? Where is Snowflake? Where is C3 AI? Where's
it's getting colder. It's getting colder, but I don't see any fucking snow. You know what I mean?
Exactly.
It's cold in Jersey today. There's no snow.
It's absolutely freaking crazy. And, if you want to take it a step further, Palantir announces Palantir AIP, and people are not giving them credit. It's so disgusting. And within a month, they don't just have a minimum viable product like, yo, this can do something okay. No, they got a literal working product. Then they have AIPCon 1. Then they have Palantir AIP demo that most people didn't watch. And then you have Palantir AIPCon 2. Now you have Palantir AIP bootcamps. Where the fuck is Databricks? Where the fuck is C3 AI? Where the fuck is Snowflake? They're still acquiring companies, multiple companies, to try to come up with a product next year that can compete with Palantir. But guess what's going to happen
just
next
acquired
year?
another company for $100 million a couple of days ago after acquiring a company for $1.3 billion a couple of months ago. Snowflake acquired
It's-
Neva for under 50 million. Palantir acquired nobody.
And this is to compete in LLMs. This is to compete and put out a product like Palantir. They know this. They know that's the future. But Palantir is so much ahead because Palantir has been doing this for the last decade. They just never called it AIP.
Yeah. No, I agree. Look, at the end of the day, I think the best scenario, and I know some people in the chat might not like that I say this, but if the stock tanks tomorrow, but AIP client growth is up, revenue is whatever, and they're GAAP profitable, that's a dip you buy. I think the only dip you don't buy is if the AIP customer count really it barely goes up, or they're showing signals in demand, weakness in demand, because that means the boot camps aren't working. From everything we've seen, the boot camps aren't only working. I mean, it's flying off the shelves in terms of how they're getting people to come in. And if the boot camps are working, client count is going up, and revenue stays 16% year over year, and it tanks to 12, 13, that is a great dip. In my opinion, that's a phenomenal opportunity. Maybe that's enough to keep the stock up, but we'll see.
Like a SoFi dip.
Like a SoFi dip. All right, let's spend the last 5 minutes on SoFi. You have a big position in that. How did you like their earnings?
I mean, I went over it yesterday. The earnings look great. It looks like, they're going to be focusing on GAAP profitability next year. I know there's other requirements. I think like $17 billion market cap minimum and things like that. But it looks like they are trying to do their 2025 at some point, S&P 500 inclusion. I think their numbers were phenomenal. They did a triple beat.
Did you expect 700,000 members? Did you expect that?
I don't pay attention to that so much. To be honest with you, I'm not like crazy into SoFi like you guys. That's not a knock on you guys. So I just wanted it to be bigger numbers than before. And that was the biggest quarter we had, right? Not in percentages, but actual numbers. So that's fantastic. What I want is a check mark. I want those charts to keep looking like a check mark. I want Nike to be jealous of the charts of SoFi. And if you look at the charts, they just keep going up, up, up.
Up and to the right, yeah.
Like it's freaking, like their mortgages are starting to go up. So the acquisition that they did with Wyndham how do you pronounce it?
Wyndham
Capital. Yo, that's a freaking amazing acquisition. And you could tell because their home mortgages is going up. Eventually, they're going to be doing refis. They don't have that right now. I mean, I'm not refis, home equity lines of credit. They don't have that right now. So there's more products to offer and stack on top of the existing products. But if you do the numbers and you go between member count and products offered, the ratio for members and products offered was 1.46 for this quarter. But then if you go for total, the ratio was 1.51, which means that their net retention, let's call it like that, keeps increasing. Not the money value, but the amount of cross products that they're selling for each member over time.
Yep.
And that's the thesis, right? So the deposits absolutely floored me. 2.9 billion was massive because we're expecting 2 billion plus, but we got 2.9 billion, which is 2 billion plus, but that's a big plus, right?
Yeah.
So
it's basically 3 billion, basically 3.
Yeah. And you start thinking, well, a lot of these banks right now are prospering from a high interest environment that they can essentially offer higher interest. Some banks don't really care about that. And it's crazy that a lot of the people that deposit in these banks, like half of them, the bigger banks, the legacy banks, they don't even get high interest yields, right? Whatever that is for those banks, they just hold their money there.
Yep.
Well, SoFi, when the high interest environment is going to go down, is still going to be able to offer higher annual percentage yields because of all the deposits that are coming in, because they give back in savings account, right? Instead of giving you dividends on the stock, like most banks do. This is going to play a huge, huge, huge benefit for SoFi in the future when interest rates are going to be going down, but SoFi is still going to be giving you, let's say 3%. Yo, that's going to be massive.
It's going to be better than a lot of people. Yeah,
absolutely. Right. And I don't know what that number is, but it's really big. So I'm really proud of SoFi. Galileo went up. So everybody forgets that SoFi is 3-pronged, right? And every prong has separate prongs, but essentially SoFi is a bank, lending products, savings accounts, or whatever. Then SoFi is a financial trading, right? Like buying, selling stocks, crypto, whatever. But it's also a tech platform, right? A financial tech platform in the form of Technisys
and Galileo. And that's not even really, the market's not even caring about that yet. So yeah, I agree. There's a lot of value there. Any thoughts on Verizon?
Killed Verizon. Yeah, I was just about to say, Chris is so good. Like, he's been absolutely freaking killing it. Like, he only got one thing wrong this whole time that I know of,
Palantir.
which is Palantir, which is fine. And I'm not like poking at him. I don't think people understand. I give Chris the most amount of credit. Like, I always respect him, right? Like, I give him so much respect. He calls these things like crazy. The amount of research and due diligence that this guy goes through is insane. And he's been knocking it out of the park. I was literally talking to him about Verizon. Did not realize that Verizon's earnings was the next day. I wish Chris told me Verizon's earnings was the next day of me and him talking. And boom, it kills. And their dividend is beautiful. So I'm stacking up like crazy Truist right now because I just want that dividend in the future. So my goal is to have a few million of collecting those dividends, and I just keep adding to my Truist position. I sell covered calls, I take the money, I buy Truist for the dividend and the growth potential. I would have done that with Verizon, but then I had that 10%. Not to say it can't grow anymore, but that's a freaking beautiful play.
And it's very similar.
Shout out to Chris.
Verizon's at a 7.49% dividend. It was at 8 like a week ago, and it's up like 15% from 30 to 35 or 10%, whatever it is. I think Chris tries to find companies that are massively undervalued on the asset price, have somewhat of a dividend, and have capital appreciation towards them, and then just does a shit ton of DD of like, is this an opportunity that is not a value trap? And
he looks at so many things that people don't even realize. Like, he looks at so many things. And then I was in where was I? Croatia and Montenegro, and he was talking about the chicken wing thing, and I was so mad because I wanted to buy it, and it was like, and I was like, I think Montenegro, which is like an old Soviet country, like old communist country, and they're not part of the EU, and you could tell it's still so communist over there. The internet was shoddy, and I was in like the mountains, but I wanted to buy those chicken wings because it made sense. And look, chicken wing shop, whatever, the Wingstop went up. Like, this guy is freaking really, really good. He finds a lot of things, and he's not emotional. He looks at it. But remember, guys, Chris is a trader. He is a swing trader. I'm sure he has a long-term investment, but he is a trader. Just remember that, everybody. He's in, he's out, he's a sniper, he makes his money, he's out.
All right, I want 2 more companies to get your thoughts on, then we'll get you out of here. HIMS. Are you still in this company? You like this one?
Yeah, I got him. So I got a lot of slack for it, but I was right. I don't care at the end of the day. So when HIMS was like $8 and something cents, I was like, yo, this thing is going to go under $6, and I'm not buying shit until it's under $6 again. And right now it's under $6. Everybody hated on me. That's the problem. People get so emotional, and it's like, at the end of the day, bro, it's real money. It's my money. It's my family's money, and I'll do what I need to do with it. I ended up getting out of HIMS. I sold out of a huge position. I ended up buying a really big position of options, but at like 20% of my initial position, like cash wise. And I did the calculation that if HIMS hits, then I make the same amount of money, but that freed up a lot of money for me to buy other stocks. Now, at this price, I really like HIMS. I'm going to see what happens in earnings right now. And if they could destroy earnings again, and the price still goes down, well, then the opportunity is just going to be freaking amazing.
Yeah, they're growing at like 83% year over year. So, I mean, it's definitely a growth stock.
But yeah, I still have a large position of options. Another thing is I started looking at holding stocks a lot differently. HIMS has a terrible covered call and cash secured put options. It's just terrible. You can't do a weekly, and there's no buyers. It is very bad. So the reason why I love Palantir and SoFi and Robinhood to respect, they have a lot of action for covered calls. So you can make a decent premium selling like 20% out of the money. That's not happening with HIMS. It doesn't happen with Truist either. So I'm looking at investing a lot differently, that I'm trying to make weekly salary by selling covered calls. So if the stock positions I hold can't do that, I'd rather have them in leap options. If that makes sense, what I'm saying.
Oh,
I never realized how much money you can make.
Trying to collect some income off these stocks. Last question for you. This one's today. PayPal. Any thoughts on that one?
No, I'm excited to
lose some money today.
Yeah. So, look, I want to just say very clearly, and also like Tevis, he sold out of Palantir to put his money into SoFi. I can't blame the guy because he's not a Palantir guy, right? He's a SoFi guy. That's his thing, his fintech. He did Palantir as a trade. He made his money. He's like, all right, I want to invest it somewhere else. That's kind of what I'm doing with PayPal. I'm not a long-term PayPal guy. I'm going to probably sell out of it in the next 8 or 9 months. And if I make money on it, fantastic. I'm going to use that money to buy more, probably Palantir and Truist, probably SoFi. So this quarter today is not the time they're going to have an inflection point. Their transactional margin is probably still going to go down as per the interim CTO, COO, whatever her name is, Gabriella. The inflection point is going to be quarter 4. They've been saying this since quarter 1 of this year. Oh, later on this year. And the transaction margins keep going down. So it could be a complete bluff and bullshit. And the transaction margins are still going to go down even quarter 4 next quarter. And that's going to absolutely destroy PayPal. If they can surprise and the transactional margin doesn't go down, but it at least stays steady, then they're going to have a decent quarter, in my opinion. I think the opportunity here is if the transactional margin actually increases in quarter 4, quarter 1, then I think 2 and 3 next year is going to be an opportunity to get out of options if you guys have them, or out of your shares if you're doing it as a swing trade.
Agreed. We're seeing that 10-year come down to 4.7. Yes, theoretically, Christopher, stock should go up if the 10-year is going down, but which is why the S&P is doing well today. Nasdaq's doing well. But 4.7.
How are we doing? I didn't check all day.
S&P at 420, Nasdaq close to 13,000, 12,938. Some individual equities are down, but overall indices are up. That 10-year has to come down more to like 4.2, 4.3.
You want to talk about Bitcoin?
Yeah, I mean, Bitcoin at 35,000. How are you feeling about that one?
Yeah, I feel really, really good about Bitcoin. I've been saying this for quite a while to the channel members. Shout out to everybody that's making money. Guys, I just want to make it very, very clear. I don't give a shit if you believe in this product or not, if you believe in the DeFi or not. And unlike most people, I actually understand the DeFi, decentralized finance, of the whole crypto market, not just Bitcoin, but I actually use it, okay? Forget about believing it or not. Very fucking simple. The current market cap of Bitcoin is approximately $600 billion. Between the 9 ETFs right now, there is $15 trillion under asset management. All of the large asset managers say at least 1% of your portfolio, or you should have 1% of your portfolio to risky assets and have exposure to Bitcoin. 1%, 15 trillion, 150 billion minimum. That's just from these ETFs. 150 billion is 25% of 600 billion. On a rumor that this is going to happen, Bitcoin jumped from 27s, low 27, high 26 to low 29s on a rumor that the Bitcoin spot ETF got approved from BlackRock. If 150 billion is going to go in a $600 billion market and there's a finite supply, you know what you can print? You can print stocks. Believe it or not, the dilution of stock-based compensation, you can print more stocks. You can print more money. You could even find more gold, believe it or not. You cannot defy the mathematical programming of Bitcoin. It's not happening. So we know exactly how much is coming out. 150 billion that's going to flood 600 billion is not going to bring up the price by 25%. This is going to be an instant double, if not more. And then you're going to have a lot of retirement funds that are going to be able to buy into these ETFs because they're regulated, which is going to bring in even more money. That's all I got to say. Follow the math. Do the logic. That's it. It's just logical.
Yeah, and I think the government continues to spend and devalue the fiat currency. Whether you believe in Bitcoin or not, it looks like something that is less susceptible to being manipulated as much as the dollar is. So, all right, Adam, thank you for joining me, man. I appreciate it. I needed a little bit of time off from talking, and we needed someone else a little smarter than me to give a bunch of his thoughts on everything going on. Will you want to join me tomorrow, 7 a.m. for earnings?
Yeah, I'll probably be here, depending on my kids, but yeah, I'll probably be here.
Okay, it'll be you, me, and Arnie again. Ladies and gentlemen, please like the stream. Please subscribe to Adam. I'm putting his YouTube in the description or in the chat right now. Please make sure to check out his channel. And tomorrow, 7 a.m. Eastern Standard Time, we will be here for Palantir Q3 2023. One of the most exciting, innovative companies in the world. We'll be here breaking it down for everybody, 7 a.m. tomorrow. Thank you, everybody. Have a good one. Follow Adam on YouTube, and we'll see you tomorrow.
Chris, we love you.
Love you, Chris. Bye, everyone.